I've recorded a tutorial on the indicator, which basically turned out into a trade recap and lots of analysis without talking about all the features of the indicator. So I want to make up for that and just do a very quick round and show how the indicator can be used, the Pro indicator can be used. And so try to be brief, show the options so that you can use it for your own trades when it will be released, which is soon now. Okay. First thing you do, you install it, you follow a link, you add it, and then you turn it on. And by default, it will look either like this or with some extra bells and whistles. It will basically just highlight the market structure. Now, one important decision that you have to make when you turn it on. So I assume you are a little bit familiar with the sort of indicator that I've been working on. I've been working on a market structure indicator. There's a free version around, marks, break of structure, continuations, market structure breaks or shifts, and protect the levels, and the 50% of those zones, or you can actually show of the zones, you can show 30%, 70%. You can extend the zones in this Pro version, extend the zone until the 50% has been mitigated, in this case at least wicked through. If you don't do it, the indicator will just end, the lines will just end at the zone. If you extend them, they will extend until they are mitigated. If you like to see other levels other than 15, you can see the 30, you can see the 50. You can change the color that you want to see. So for example, for a bullish zone, you might want it slightly green, and for a bearish zone, you might want it slightly red. And you will see that the 50% line now is extended until it's mitigated. So all these lines that you see, the dashed ones, will tell you when a certain zone has been mitigated. Imagine that you want it a little bit more prominent. You can make the line thicker and solid, and this will draw a very thick line at the 50% of the zones, and so you will not miss it. Okay. So the default is to show the zones. If you hide the zones, you will only see the market structure breaks. If you want to hide the market structure breaks, you can uncheck them. Break of structures, market structure shifts. If you don't like to see the protected levels because they are all fake on 5 seconds, you can disable them. You can see, you can show it or hide it. You want to show the zone in general, and you have a big decision to make. How do I want my zones to be drawn? Do I want to use the wicks, or do I want to only use up close candles for zone highs and down close candles for zone lows? That will change a little bit how the zones look. So if you tick this box, the zones will not be considered. Nothing will be considered. Wicks won't be considered. Only the last up close candle that hasn't been breached yet will be considered as a high of a zone. And this is a style of market structure that's been popularized by a trader named Pack. And many people instead are using wicks. So we track the highest wick before a pullback and then move on from there. Okay, so my indicator supports both ways to draw zones. You have a 50% that's drawn, extended until mitigation, and then the fun happens. Okay, let me show you. In the previous video, I went in great detail why we were thinking that this would be a bearish continuation. So here's a new day starts at midnight. And now you get to the charts. If you live in Europe, you get to the charts at 1, 2 a.m., 3 a.m. and you start to look for trades during the so-called London session. So we reach an area where there has been a break of structure to the downside, like a market structure break or market structure shift to the downside. We tried to continue and failed, and we are now retracing up, and it's 220. What else can we see in this market structure, in this specific market structure? We can try to train our eyes, or we can ask the indicator, what does it see? Let's see the bearish structures that it sees. So we turn on, are there any SNDRs, so areas responsible for breaking structure? It does see one. Let's see if it sees origins. It does see an origin. It does see an origin. So there's a few ways that you can use. So if your model is working from SNDRs, you can use SNDRs. If you want to work from origins, you can work from origins. Let's say we're now going to use the SNDR in this situation. I only highlighted the bearish ones, and you need to make sure to decide if you want to use the SNDRs that have already been mitigated, if you want them on the screen or not. So if you uncheck the prune, you're gonna have all the previous SNDRs drawn on screen, and it can get messy. But you can see that the indicator had drawn an SNDR here, so a certain pullback before a major push. This was violated because we were operating inside this origin. If I do the same and hide the SNDRs and only show the bullish origins, also the one that have been pruned, and you see that we are working inside an origin. I thought it would draw something here, but it didn't. And let me not get too carried away with this. Let's keep going like this. So we get to the chart and we realize two things. Okay, there's this bearish zone that's been activated. We came up to it, but we didn't come to the 50% of it. And there is this pullback before the major breakdown. You could call it an origin, you can call it an SNDR. And we want to see how price reacts around here, eventually to think about a continuation to the downside. Okay, so we let price run. You can configure how you want the chart, the SNDRs to change once they have been tapped once or twice. So I'll show you. Once price gets up there, the indicator will tell you, let me do it like this. Okay, we came inside this SNDR, and now the indicator changes and tells you there has been one tap. You can customize how this should look. You can say I would just want to call it minus capital S, and instead of one tap, just give me an icon that says one, and I'm good. And that's how it's going to look like if you change it. So it's going to be, okay, marked as one tap. And then after price leaves it completely, once price returns to it, then you get the double tap. And also that one you can customize, make it look as you like. For example, changing color. I don't like this red, I like it more orange. And it will change. And now you have showing a 2 when there's 2 taps. Now let's go a bit further. So price tries to go up to the 50% and continue, and we are, by the way, at 50% of the zone. So if our narrative is we're going to continue to the downside, we reached an SNDR, we reached 50% of the mitigated zone, we are in a Fibonacci area where there could be a retracement, then we wait for a strong break of structure, like here, and enter. So you could have taken a trade here. I showed you in the previous tutorial. And then what I wanted to show you is that how you can combine multiple time frames and multiple concepts to take profitable trades. For example, let's copy this. Okay. I copied the indicator from the other side. I want to add something that's going to look very nice, which is, let's track also bullish origins that haven't been mitigated. Right? There's some gigantic ones. Maybe we want to just track price. So there's one thing I want to show you is that whenever price, especially in the lower time frame, grabs too much of the market structure and you want to operate, for example, in the 15 seconds, I don't really care about what happened many hours before, you can choose a starting time for an indicator so that you can see the internal structure. So in this case, we care about from midnight, from 1 a.m. 22nd Friday. So we go 22nd Friday from 1 a.m. Doing this, you can drag it, and now we're going to get we need to check the check mark. Many people forget, and then you're going to get the zones to be drawn only from this point onwards. Okay, let's see what we can see. So we're generally bearish. There's been a double top in this 1 minute zone, and we are now showing bearish SNDRs and bullish origins. You'll see why. So we're tracking market structure. We are tentatively looking for an entry to go bearish on this market in this specific London session. And please stop doing that. And okay, so what do we see? We see that there was a continuation to the downside, then market structure shifted to the upside, and we are retesting the SNDR. See, the SNDR here is not drawn properly. You should use this swing eye. The reason why this happens is because in drawing SNDRs and origins, you need to decide how wide the pivot point, so how many candles to use for a swing high or a swing low. And let me move it like this so I can watch the screen better. So in general, I set it to 3 as a default, but sometimes you want to be very precise and only use 3 candle formations for swing highs and swing low. So if we change the SNDR to using only 3 candles, you will see that in this case it draws the SNDR as the last up move, the last swing high before a down move. And you can include whatever, also this swing, but if you actually see, there is a tiny swing here, so that's the SNDR. So price comes almost touches it, then comes down and does a one tap, let's say reaches 50% of this origin and reverses. So let's say the system function, let's say the objective of bouncing from an SNDR is to continue the trend. Now it could not put in a new low, so we reached 50% of this origin. So where are we going? We're going back up. So you could take along from here up to until the SNDR that we left there. But first we came and do a double tap, second attempt at continuing into this origin and continue the trend. And what time it is? It is 3:30. So there is one final manipulation before price actually makes the move that was planned to do. And so it does a double tap, and we go back up to retest the SNDR. All right. If you have this indicator on with bullish origins showing and bearish SNDRs to show the opposite side, you could track this market structure easily using the indicator. And now we are at the critical point. We are retesting the 50% of the zone. We actually are going. We wicked the 50% of the zone. We are in SNDR. We did get to it once. Can we do it twice? All right. We did it now twice. So you see the number became a 2. So we tapped it twice. We reached 50% of the zone. And it's becoming a time, it's 3:39, where a move might happen. So maybe this was your entry. So here, or maybe here, wait for price to come back, 10-point stop, and we already know that this price will reach the low of Asia, or at least continue basically the zone. So we analyzed on the 1 minute, we have a target on the 1 minute, but we do an entry in the 15 seconds candles, and then there's a little bit of dilly-dallying until 4 a.m. So you could spare yourself a little bit of sweating by entering on a break of this level, for example. And at 4 a.m. we do reach the famous double top level, and that origin doesn't hold anymore. Well, there is a retracement, and then there's a very fast continuation to Asia low and further down. So as you can see, the zones are drawn for you. The SNDRs, see, as we are tracking market structure, the last up close move before breaking the structure is drawn for you, and so it is here. So if price should come back here, it would say, hey, there's a tap, and there's a double tap, and you could think about taking continuation shorts. What else can I show you? Yeah, so this is some of the features. The indicator will you can choose selectively what to show. Bullish SNDRs, bearish SNDRs, bullish origins, bearish origins. You can choose to show the origins as drawn as a last candle of a bearish zone or a bullish zone, or if you use the last swing point. I also added the feature that will show you when so at which level would you consider an origin mitigated, and this is not there yet for SNDRs, but there's no reason why it cannot be. This is what I wanted to show you in a little bit more compact way. So I see I'm 18 minutes now into the video. Hope you found this useful, and I'll talk to you soon. Thank you very much. Bye bye. Music.